Hi, and welcome to the X22 Report. My name is Dave, and this is episode 1615A, and today's date is July 13th, 2018, and the title of the episode is The Strategy Behind the Madness, Moves and Countermoves. Let's get into the economic collapse financial news. Now, we know that the people of the UK, they voted in a referendum to remove themselves from the EU. And the people thought, okay, we had a vote, the people have spoken, and this is what we want. Now, of course, the central bankers, the establishment, well, they don't want this to happen. And we've been saying this for a very long time, where they were going to do everything in their power to keep the UK in the EU, but maybe give the illusion that they're out of the EU. And it looks like this is what they're trying to do, but the people are not stupid. The people understand what is going on. And the long-awaited white paper, well, it really doesn't respect the referendum vote. And we see that many people have resigned over this, and a lot of people are saying that this is not what the people wanted when they voted in the referendum. And we see that people are very angry about this. Now, when we look at this, we can see that there are certain groups that are loving this, and this is the establishment. I mean, the white paper has received a huge amount of praise from the George Soros-funded Open Europe think tank, Henry Newman penning an open letter pleading with Brussels to take seriously the fair and reasonable proposal. So you can see right now that the people on one side are saying, no, this is not what we want. This is not what the whole vote was about. And what you're doing here is you're giving into the EU. On the other side, the establishment is saying, this is a great deal. This is fantastic. Let's do it. Now, Trump, as we know, he is out visiting Theresa May. And Trump is saying that the Brexit means that there's going to be no U.S. trade deal possible. And Trump is 100% accurate. If the UK keeps the pre-existing trade pact with the EU and essentially stays economically attached to the EU through this new deal, then any bilateral trade deal between the US and the UK is essentially impossible. The EU doesn't allow member nations to conduct their own trade negotiations. So any agreement that keeps the UK attached to the EU economically means any trade deal with the UK would be a trade deal with the EU, and the EU trade positions are adverse to the ongoing economic interest of the United States. So what May has done right now, she screwed herself and her nation's economic interest by following the path of the European Union and giving in to the establishment. And we can see right now that this is going to be a huge problem. Now, we might see the people, they might rally together and say this is absolutely ridiculous. They might ask May to leave her position, and we might see someone take her place. Now, we'll have to see how this goes, but we know that the establishment, they never want to let anyone go. Once you are in forever, and they will try and do anything they possibly can to keep every single country within their system. We see the U.S. budget deficit has hit $607 billion in 9 months, and spending on interest right now is exploding. And the U.S. right now, it has a real bad spending problem, and it's not under control whatsoever. And at this point, this is on purpose, because what's happening here is they're pushing the system to the edge, because the administration understands that the central banking system cannot continue on. And the only way to destroy the system is to push it to the edge. Use everything that has been used before. This way you can turn around and say, well, this was your system. This is how you calculated unemployment. This is how you calculated GDP. Are you telling me this is all wrong? Because if it is, then we need to look at this very closely. And with the central bank, if this is not correct, then we need to look at the central banks. Now, according to the latest monthly Treasury statement, in June, the U.S. collected around $316 billion in receipts. consisting of $162 billion in individual income tax and $94 billion in Social Security and payroll tax, $3 billion in corporate tax, $22 billion in other taxes and duties, a drop of 6.6% from the $338.7 billion collected last June, and a reversal from the increasing trend. So the government spending is a huge concern right now. It's a huge problem. It always has been. This is why our debt continually, moves up and up and up. And when we look at the interest payments, they're already rising rapidly, and they just hit an all-time high in the first quarter of 2018. And what's going to happen here is all these tax receipts coming in and everything that is happening as the debt continually moves up, as interest rates move up, as debt moves up. Guess what? The tax receipts coming into the government will not be enough to pay the interest, to pay the principal, to pay any of this. And this is common sense. I mean, think about it. Look at your own household. If you're making $50,000 a year and you keep charging on your credit cards and you take out another credit card and the interest continually rises, you started out at 10%, let's say, and that's really good for a credit card, and it moves up to 15%, then it moves up to 20%, and you take out another credit card, but your income has gone up maybe to $51,000 or $53,000. Sooner or later, what happens is you don't make enough to pay for the interest, you don't make enough to pay for the principal, you definitely don't make enough to pay the interest and principal. And this is what is happening here in the government. We're getting to a point where this cannot be sustained. It is completely impossible. Now, we understand that Trump has been making a lot of bilateral trade agreements with many different countries and making separate agreements with all these different countries. And this is his entire plan. And if we look at this, we can see that it seems like it's madness, like, oh, why wouldn't you go through the World Trade Organization? But we need to understand that these bilateral trade agreements, they are still being managed by the World Trade Organization. They're still under the control of the WTO. And I think this is the plan where make all the bilateral trade agreements. These are all separate agreements, and these were made with each individual country not going through the WTO. Yes, they're managing it, but it's not going through them. And then put out the idea that we don't need the World Trade Organization. Now think about it. If you have everything in place and you have all these bilateral trade agreements in place and you made deals with the leaders of these countries, and it just falls under the WTO because that's the law right now. To get rid of the WTO, it's that much easier. And I see this is his strategy in what he is doing. He's making all these deals, and when the time comes to get rid of the WTO, and remember, this is a globalist trading agreement. Same thing with the TPP, same thing with NAFTA. He can get rid of it, and it'll be a lot easier to get rid of. Now, think about this. If he made all the agreements through the WTO, this would be centralized. They would make the agreement, they would handle the agreement, they would manage the agreement, and it would be centralized in this area. Making bilateral trade agreements with each individual country, it's decentralized. And guess what? Globalist central bankers, they hate decentralization. They don't like that. They like it centralized where they can control it. And by Trump doing this, it will allow him to say, you know what? I have all the agreements. They're with all these different separate countries. If one goes bad, it's not a big deal. We still have the others. And we don't need the WTO to manage this. We will manage this. And we need to get rid of it. And this is why he put the breadcrumbs out there saying, you know something? We can walk away from the World Trade Organization. We don't really need it. And he did this on purpose. He's setting it all up. Now, we've been following a lot of indicators on how the economy is doing, and we have been seeing that the economy and these indicators, well, it's not doing too well, and they're all flashing a huge red signal saying recession, recession, recession. Now, we know the Fed has been trying to get rid of a lot of these indicators. They don't want us to see what is really going on, and they're changing the data. But Paulsen is out there, and he's warning that 6 of the last 7 recessions, this happened. And he's looking at this indicator. And this less followed indicator has a good enough relationship with recession risk during the last 50 years that it should not be ignored at all. And this is coming from Jim Paulsen. Now, Paulsen warned last week that it's been too quiet for too long. He now sees the potential catalyst for the market's next move as low-rated investment-grade credit spreads blow out beyond an historical crucial level. For the first time since just prior to 2007-2009 recession, premiums on the lowest rated tranche of investment-grade U.S. corporate bonds have risen to 2% after being below that level. And this is according to the data compiled by the Minneapolis-based research group. The analysis looks at the gap in yields between corporate debt rated BAA by Moody's Investors Service and those on 10-year treasuries. This trend fits in with the recession imminent warnings coming from the treasury market. But we probably should just ignore this because, it's been right so many times before that it's probably meaningless because, as we can see, they're telling us there's nothing coming, there's no problems, the economy's strong. Go back prior to 2008 when the entire market came down and everything was starting to fall apart. They were giving us the same type of news, that everything was great. The market's up, jobs are very low, the real estate, it's contained, companies are profitable. They were telling us the same exact thing. The subprime securities, the AAA rated, that everything's great. They're doing the same thing now, but they're doing something a little different. They're starting to pivot, and they're starting to make a case of why the economy is starting to do poorly. And we're starting to see this in the mainstream media. They're already saying that we're heading towards a recession. The Fed is already covering up their data. They don't want anyone looking at what they've been doing. They want everyone looking someplace else. And we see the Federal Reserve Bank of St. Louis is saying that Trump's tariffs on Chinese goods, well, this may backfire, causing job cuts, plant shutdowns, and the economy might implode. And we're also hearing this from the St. Louis Fed President, James Bullard, where he's saying that companies are complaining, the economy might be affected, we might see the economy, it might be hit hard from all of this. Now, if you notice, the Fed has begun their narrative. The Fed has been hiding their data. The Fed has changed their data. The mainstream media is out there supporting the Fed, saying that we're heading towards a recession. The Wall Street Journal, New York Post, the rest, they're laying their breadcrumbs down, letting everyone know what is coming. The same thing's going to be happening with Trump and the Patriots. They are pushing the economy to the edge. This is a central banking economy. I think everyone's a little confused on what we're doing here and what's happening. This is not a people's economy, a people economy where they said, this is what we want. This is a central banking economy. This is what they want. And to get rid of it, you need to push it to the edge, because anyone that has studied this understands that a fiat system only lasts a certain period of time. To end it, you push it to the edge. And this is why the central bankers normally have some type of an event to cover up when their system collapses, because they can't be blamed for it. And normally it ends up with some type of war, an event, and things like that. This time it's a little bit tougher. Their plan, well, they don't have it anymore, because the person they wanted in office to push us into a war, it's not going to happen. We see that peace is happening around the world. Even though there are still certain people thinking that war is going to happen, it's not going to. And if you have peace, how do you have an event to cover up what is happening? You can't. And they need something really, really big to cover it all up. They have to show that, oh, this is why you need to sacrifice. This is why we can't get supplies to the stores. This is why this is happening. This is why you can't get fuel. So now they're going to have to use what Trump is doing. And as we can see, this is not going to be big enough. I mean, they're going to try to make a case. They're going to try to control the narrative, but it will not work. It is not a big enough type of an event that can cover up everything that they've done, because this is not just happening here in the U.S. It's going to be worldwide. And again, what do they need to cover up a worldwide economic collapse? A war. A world war. If you don't have that, how are you going to explain the world economy, the global economy, coming down? You're going to say it's because of 10% tariffs? It doesn't make sense. And this is the problem that they're having. But they have no choice because, as we can see, the system is at its end stage here. Trump and the Patriots know this. They're pushing it to the edge, preparing the economy to be out of the central banking control. This is why they're getting rid of NAFTA. This is why TPP was struck down. This is why the World Trade Organization, the United States, will be removed from it. Everything is being pushed in that direction. But one thing is for sure, we know that this system is going to go through a transition, and it's getting closer and closer. So you must be prepared to ride out this storm. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.